How do you look at, the possible rising of infections with possible lockdowns and what kind of recovery you're expecting?
I still think it's, and at the moment, the market, is when you look at the performance, is still focusing on the huge amount of stimulus that we're getting, both from the central banks around the world, but also now, continue to be expected to come out of the US as well. And that really seems to be, at the moment, having a bigger effect than the rising tensions and the rising virus cases. And I think that there's just a huge amount of liquidity that's being injected and will continue to be injected for the foreseeable future. It's just overwhelming market valuations.
What does that mean actually for fixed income? Where do you find value given all these uncertainties?
So we've been saying for a long time that we want to be co-investing with the central banks. So that's finding the parts of the government bond market where there is still some yield. I would have probably said the 10-year Treasury had that a couple of weeks ago. Obviously, we're down at 50 basis points or so. But when you look out the curve, the 30-year part of the curve in the US, parts like Australia and New Zealand, there's some value. And then I think the market's got confidence, as we have, that the central banks around the world are going to continue to support the credit markets, particularly investment-grade credit. The Bank of England, the ECB have been doing it for a long time, buying corporate bonds. The Federal Reserve is now involved in that. And I think that's the area where there seems to be the biggest amount of focus. We're obviously seeing a lot of flows go into that market. And then really the challenge from when you actually really go down the credit spectrum into the high yield space is rolling up your sleeves and finding those companies that will still be with us over the next few quarters, because we are seeing defaults picking up. But that's where the value is. That's where the yield is. And I think that's where the hard work is going to be for us over the coming months.
How much more support can we see from central banks around the world?
I think we've heard very clearly from the central banks that they will continue to support the economies as it is needed. We heard that particularly from Jerome Powell last week. I think we'll hear it from the Bank of England this week. We've obviously had the increases from the European central banks over the last couple of meetings. So I do feel that the reality is, until we start to see improvements and still we start to see inflation picking back up and start to see unemployment coming back towards full employment levels, that the central banks will be there and that they will continue to do more if required.
Is there, how much more fiscally, Ian, can you see governments actually spend? Unless we get a stimulus in the US, are you much more cautious about the path of the US compared to the rest of the world?
Yeah, I think the market is very much expecting a stimulus package. I think there's a big debate as to, obviously, there's pretty wide range between Republican and Democratic numbers at the moment. But I do think it would, in an election year, the political ramifications of not passing this package and not getting something through would be too great. So we would expect something from them. And then we've obviously got this huge European recovery fund that is going to be in play over the coming years. So I think the fiscal side is again going to be very, very supportive.